All right, let's talk about a company we all feel like we know inside and out. Netflix. But you know what? This isn't the old story about the scrappy DVD mailer that took down Blockbuster. No, this is the story of a mature, calculating giant. It's about how one of the biggest deals in entertainment history completely fell apart, and in doing so revealed a massive change right at the very heart of the company.
So picture this. Late 2025. Netflix makes this absolutely seismic move. They bid a staggering, and I mean staggering, $82.7 billion to buy the legendary Warner Bros. Studio. This was supposed to be it, right? The final checkmate in the streaming wars. But then, just a few months later, poof, the whole thing just collapses. And the big question is, why? What happened?
Okay, so the official reason came straight from the top. The co-CEOs put out this statement, basically saying, hey, the price got too high, so we're out. It paints this simple picture of being careful with money. But that one sentence, well, that's just the tip of the iceberg. It's actually the key to understanding a huge transformation that's been happening inside the biggest entertainment company on the planet.
To really get what's going on, let's do a super quick recap of the drama. Because man, it all happens so fast. In December 2025, Netflix drops its blockbuster bid. By January, they're so serious, they sweeten the deal to be all cash just to speed things up. But then, February hits. A rival bid from Paramount Skydance gets called a superior proposal by the Warner Board. Now that's a fancy legal term that basically means Netflix had to either pony up a whole lot more money or walk away. And on February 26th, it was over. Netflix walked.
So to figure out why they walked, we first have to understand the new playbook they're using. And I want to be really clear, this is not the Netflix of the 2010s. The company has completely changed its mission. They've shifted away from that growth at all costs mindset to something new, hardcore, sustainable profitability.
Yeah, this really shows you the whole evolution. For years, Netflix was the poster child for the classic Silicon Valley playbook, right? Burn cash, get users, get big, fast. The only number anyone on Wall Street cared about was how many new subscribers they got each quarter. But that era, it's over. Done. Now the name of the game is profit and keeping you, the user, engaged. The metric they obsess over has shifted to average revenue per member, or ARM, and that tells a much, much healthier story about the business.
And hey, if you want stone-cold proof that this new playbook is working, you don't have to look any further than this number. For the entire year of 2025, Netflix posted a stunning 29.5% operating margin. Now, that's not just some number on a spreadsheet. It's basically a declaration of financial power. It's Netflix telling Wall Street the days of us just burning cash for growth are long, long gone.
So, the big question is, how are they pulling off this newfound profitability? Well, they've built what you can think of as a three-headed growth engine. And it's all designed to make money in ways that go far beyond that monthly subscription fee we all pay.
The new Netflix really stands on three main pillars. First up, you've got this thriving advertising business. It's a high-margin way to turn their huge audience into a whole new revenue stream. Second, there's this massive push into can't-miss live sports. We're talking the NFL, the WWE. These are events that keep people from canceling, and advertisers are willing to pay top dollar for. And third, they're making this really smart, long-term bet on accessible cloud gaming, trying to grab our attention when we're not watching shows.
And just look at the speed of this ad business. It grew 2.5 times in 2025 alone to hit $1.5 billion. And projections show it could double again to $3 billion in 2026. This is not a side hustle, folks. It is quickly becoming a core part of their entire business.
Now, to really see how all these pieces fit together, we can look at a perfect case study. Netflix's new deal with FIFA. This whole move is like a miniature version of their entire new playbook in action. It's fascinating.
But first, let's quickly define cloud gaming. What is it? Well, think of it this way. It's technology that lets you play really high-quality games right on the TV you already have, just by using your phone as the controller. You don't need to go out and buy a $500 PlayStation or Xbox. It just completely removes that huge barrier for people who want to play games. And this is where you can really see how smart Netflix is being. See, they're not just making a game. They're running a brilliant three-step gambit. Step 1. Launch it to coincide with the biggest cultural event on the planet, the 2026 FIFA World Cup. Genius timing. Step 2. Forget about the hardcore gamers. They're targeting the millions upon millions of casual fans with a game that's, and I'm quoting here, fast to learn, thrilling to master. And the final step, Step 3. They completely bypass the expensive hardware. The game is free for every single subscriber, which just deepens engagement and makes your subscription feel more valuable.
Okay, and this brings us all the way back to that collapsed Warner Bros. Deal. Now that we have this picture of a new, profitable, diversified Netflix in our minds, we can see why walking away from that bidding war wasn't a defeat at all. It was actually a huge victory.
Let me say that again. Withdrawing the bid was not a failure. It was the ultimate proof of Netflix's new identity. It was a loud, clear signal of the company's newfound financial discipline. They were still ready to make the deal of the century, sure, but not at any price. There was a line, and they weren't going to cross it.
And if you want the final, definitive proof that this was the right call, just look at how Wall Street reacted. The second Netflix announced they were backing out of the deal, their stock price jumped over 10% in after-hours trading. The investors weren't disappointed. They were thrilled. They rewarded that discipline.
So here's the big takeaway from all of this. The streaming wars? Netflix won. They're not really fighting for subscribers anymore. They're fighting for something way more valuable, your attention. They now see their biggest competitors not as Disney or HBO, but as YouTube and TikTok, which leaves us all with a really fascinating question to think about. If the streaming wars are truly over, what on earth will the attention wars look like?